Now, what this is all about, of course, fundamentally, is demand for commodities. China wants commodities. The world, in the long run, wants commodities, and companies like BHP and Rio are there to provide them. And they need investment to take advantage of what may be rising prices. Now, Justin Smirk is senior economist at Westpac Banking Corporation. He's here to talk about commodity prices and those that he likes. Justin, very good day. Thanks for joining us today.
Thanks for having us in, Paul. It's great to be here.
Justin, when we look at commodities, we had an interesting thing happen this week with the Reuters CRB index. We can call this up on the screen in just a moment when I actually get around to firing it. But what we have is the CRB index crossing above the 200-day moving average on Monday, dropping below it on Wednesday, and then moving back above it again yesterday. That's generally considered to be a bullish signal. Would you agree with that?
Well, the market itself, in terms of momentum, has got quite a lot of bullish signals in it. I guess for myself, being an economist, I have a much more of a fundamental view, and I probably would say what we've seen is commodities overall, with the global crisis come on board, like most asset classes, come under a great big deal of shock. And I'd probably argue from a fundamental point they're oversold to the downside too far. What we've been seeing so far this year is a correction to that oversell, and prices really getting a leg on. And we're probably back to levels where we sort of are around a zone of where more fundamentals are actually surviving. So I'd probably argue, just on a big picture, looking at all commodities in an index sense, we're not far off where prices should be. And what we're going to be entering now is probably a period of volatility before we get to the end of this year and we get another spurt on a more solid basis run on as the globe really starts to pick up again. Right now, we've just seen that sort of overshoot from the undershoot. And really now the global demand, while it's getting much more better than what people thought it would be, it's still far from exciting.
So, in other words, there could be some downside. I mean, if we were to get some kind of a correction or an initial period of volatility, how big might that be?
Given what the market's been moving in and looking at the magnitudes of the rise, you could easily pencil in for an index itself movement somewhere in the vicinity of 20% either direction, up or down. Could be within the range of saying prices will move broadly sideways between now and the end of the year. I think the underlying fundamental trend of a solid upward trend in commodity prices is there. It's bound to stay there through the next 5 to 10 years. But for the next sort of short period of time, I'd be much more cautious. I mean, I kind of agree with the market pricing. If you look at the forwards curves, they've gone from having steep upward sloping curves to being much more flat. And I would argue that if you see any more steepness in those curves, it'll be driven by the short end, the prices falling in the near term, creating that volatility.
OK, let's take a look at crude oil prices as one of these, and obviously a pretty major segment of commodities generally. Goldman Sachs says $85 oil by the end of the year, and is now saying that we will not get much of a dip, if any, before we get there. Also talking about 95 by the end of next year. Would you think that's roughly right?
Probably in a broad picture sense, I'd agree with them. I think from a fundamental view, we still have, as a group, some concerns about the overall volatility in the overall oil markets or asset classes. We still see some risks around what happened to the US dollar. We've been seeing periods of US dollar strength lead to weaker commodity prices as all asset people chasing their security. Reverse of that now as US dollar weakens, we think there's still some volatility there. So I would argue that while we may have a target, probably not as high as $80 by the end of this year, we'd probably argue I'd still be cautious and say, look, I'd probably myself think about somewhere in the range of $70 a barrel by the end of the year. But between now and then, it could still dip below 60 during a couple of weeks trading period.
OK, we have a chart looking at stockpiles, and this is an interesting one. Historically very high, as you know. US fuel demand is also at its lowest since May 1999. Here's a chart of stockpiles. It's been a volatile 10 years, without a doubt, but also without a doubt, we're way above the long-term average. And we had a surprise increase last week as well.
Yeah, and really, if you think about where these stockpiles are and what's been driving it, you know, the collapse in the economic activity in the US and Europe, I mean, it's no surprise stockpiles are where they are. So the question is, can they actually remain at these levels, get higher or get lower? I'd probably argue in terms of the US economy, we're past the worst. US economy probably overall will be in a contraction zone for the next quarter or two and start to stabilise and grow as near the end of this year. Thinking about that from that sense, you'd probably argue that stockpiles in the US are about peaking now. and we'd probably see a downward sort of level in terms of where they're heading. So I'd probably argue the stockpile build-up is more a response to this really significant collapse in global demand in the Western world, but not in the developing world.
Right, and also we've seen a reduction in oil company spending, down about $100 billion this year, about 21%. But of course, that's going to come back. We are going to get production flowing again, aren't we?
And be a little bit careful about those numbers on those investment numbers. You've got to remember, we've been seeing a collapse in the cost of investment as well. So while that probably would argue the actual amount of investment going in a volume sense has fallen, it probably hasn't fallen as much as those dollar values suggest. So you probably still have more supply coming online than just what those headline numbers suggest.
OK, Justin, stay in the chair because we've got more coming up after the break on commodities.